What's going on, guys? Tom Worley back with a new episode of Hidden Hudson, where we continue to introduce our clients, our friends, family, resources to local businesses and resources they can use and utilize around our area, Hudson County, or even the greater New Jersey area in this case. Today, we're with Pete Melchionne of Pinnacle Mortgage. He is a trusted mortgage rep that, I've done personally, seen him do a lot of business with my clients and everything else in the past. He is my kind of go-to resource for any mortgage-related question. But Pete is unique in the fact that anybody who's ever bought a place kind of understands that it's rare that you actually meet the mortgage broker, right? You kind of go through this huge transaction, biggest transaction in your life, and the person who handled all the financial side of it was really just phone calls. There's no real personal interaction like you have with your real estate agent. So we wanted to kind of give you guys a chance to meet your, local mortgage broker. Pete, thanks for being with us, man.
All right. Thanks, Tom. Good being back.
Yeah, man. It's COVID's been a little bit interesting, man. So that's part of this shift right now, right? We're going to shift this Hidden Hudson stuff. And by the way, everybody watching, Pete was kind of the brainchild behind this Hidden Hudson stuff. He gave me the great idea of kind of introducing local businesses to our clients and referral sources. So, when we started this, it was kind of in person, but now we've kind of had to pivot. So Pete, this has been interesting, huh?
Yeah, definitely. It's been a good run. We're going to keep it going, especially when we're out there in Hidden Hudson, drinking a Guinness at a bar and different things. Can't pass that.
The last time we really did this stuff was the road to St. Patrick's Day.
Yeah.
And then the country went on lockdown.
Like then we got shut down. Yeah, that's right. Yeah. That was our 1 year actually anniversary, basically.
It was. Yeah, because we started with Mulligan's a year prior to that. Yeah, the perfect pint. So funny stuff. Hey, listen. So all right, here's what we're gonna do, Pete. Again, I want to kind of introduce people to you, right? I get to hang out with you a lot. You and I, have known each other for years, right? So with the clients and the people that are going to watch this, tell us a little bit about Pete Melchionne. Who is Pete?
All right. So basically, I grew up in Bergen County. I grew up in East Rutherford. Now I live in northern Bergen County up in 𝐿𝐼𝐾, but I've always been born and raised in New Jersey. Some of my passions is sports. I love football. We both love the Jets, big tailgaters.
Unfortunately, this season.
Kind of like a lifelong curse to be a Jets fan. That's kind of, it is what it is. Luckily, I'm a Yankee fan. You are too. So we see some championships in our lifetimes. But
those poor Mets and Jets fans, Jesus.
Right. So basically how I got into the mortgage business was I was actually going to Quinnipiac. I went to Quinnipiac for finance. I always knew I wanted to study finance. I always liked real estate. And actually, while I was in college, I knew a real estate broker down in Hoboken. And she was like, well, why don't you come home in the summertime, get your real estate license, do a bunch of rentals. And I was like, yeah, maybe.
Who was that broker? Who was the broker?
Margaret Watson. And it was Patina Real.
Who is now my broker.
Is now Tom's broker, and also which it was very funny because that's probably 16 years ago. I know Tom's father-in-law, Tom's wife, who worked Patina too. No idea who Tom was, and then circle like 10 years, a little even less, like 10 years later, and then boom, there it goes that. So it's actually a small world when it comes to that. But anyway, it was great. So I always liked real estate. I've always had a passion for real estate. It was great coming back as a college kid, doing a bunch of rentals, do one sale. You went back to school. You're like, oh, great. You're making actually, good money. And so when I graduated a finance degree. And then I really liked real estate, but I wanted to really do something with finance. So Margaret, actually along with my dad too, said, well, why don't you give the finance side of real estate a try? So I said, that's a good idea. So that's how I got into the mortgage business, a residential mortgage side. So I gave up doing real estate, gave up my real estate license, and started doing mortgages. And that was about 2006. I started the mortgage business. And I actually started at First Horizon Home Loans with the same group of guys that I'm with now. We were there for 2 years, and then we went to Pinnacle Mortgage. So basically for the last 12 years or so, I've been at Pinnacle Mortgage.
So you've been at Pinnacle now for, like you said, around 12 years, which, let's face it, right? Mortgages, real estate agents, everything, right? It's a very transient business, right? All of us kind of move from place to place to place to place, right? 12 years is a long time to be, with one company. What was it about Pinnacle, and what is it about Pinnacle that has kept you there?
Well, it's a smaller company. There's only probably about 30 employees in the whole company. But at the same time, we're super competitive. We never get beat with mortgage rates. And I just like the smaller feel of a smaller company. When we were at First Horizon, it was a bigger bank. It was more like a corporate structure type deal. I just really didn't like it. Didn't fit any of our branch really. The guys that I'm working with, we all left and we all went to Pinnacle Mortgage. And we do everything in-house. And it's just like, I could call my underwriter up local, my closing department could call them up. If, you really don't need to see people as much anymore, even before COVID started. But, you're only a short drive away if you really got to go see a file or do something like that. But it's really just the personal touch that I like Pinnacle Mortgage and what they bring to the business.
Now, you're the Pinnacle Mortgage office that you're at, correct? Because there's two Pinnacle Mortgage offices, or a number of them. Is that correct?
Yeah.
Right.
So there's our main office is in East Hanover. The office I've been at is in Hoboken. That's basically where I started. Our branch office is down in Hoboken. Probably half of my business is Hudson County, half is Bergen County, but we do all through New Jersey. We lend all over New Jersey. But
all over the state, yeah.
Yeah, all over the state. That's just a majority of my business, just because that's where a lot of my referral sources are from, is from those areas right there. Right.
Well, somebody was born and raised there and has done a lot of your business here. The renter side, when you start in real estate, everything else, that makes sense. Yeah. Right. So, something that I get a lot, right, when with buyers and everything else, right, is they usually come to me and, right off the start is, hey, I've got a pre-approval from Chase. I've got a pre-approval from Wells Fargo, Citizens, whoever it may be, right? Mortgage brokers, admittedly, like real estate agents, right, are realistically a dime a dozen, especially in a market as busy as Hudson County and Bergen County, right? There's a million of us, right? There's a million agents to choose from. There's a million brokers, mortgage brokers to choose from. What is it that you kind of do and that you want to focus on that sets you apart? Why is it that a large percentage of my clients, when they get in touch with you, right, and you pre-approve them, a large percentage of them end up going with you throughout the entire process?
Well, number one is I've always viewed myself as a relationship agent and not a transactional agent. So what that means is you're not just looking to close a deal to get a commission. You're looking to educate the client. The biggest thing is education. I spend a lot of my time making sure you're up to date on different mortgage guidelines, different mortgage coaching stuff, just to make sure that we really could educate our clients on which 99% of the time is the biggest financial decision of their lives. So besides being with them from the beginning to the end of the mortgage process, I also, after the mortgage process, we do annual mortgage reviews with our clients. Basically, we just want to keep in touch with them to make sure that they haven't got any questions, and just always make sure they're in good financial situation when it comes to mortgages. Sure.
Yeah. So I get that, right? One of the big reasons I think that you and I have always been able to work so well together, and even my partner, John, the B of B&W Residential. One of the big things that we've always done is I've prided myself on working exclusively by referral, right? So for me, it's super important to build that relationship through the process, through after closing, and continue that relationship. Because as somebody who works exclusively by referral, I'm depending on my clients to go out and be walking billboards for me, right? And one of the big things about you has been your ability to take care of the clients and kind of share those same values in the way that you work and what's important, right? The education process is a huge thing, right? Buying a house it can be stressful, right? And there's a lot of moving pieces there.
Right. Yeah, you're absolutely right. So like the way I've built my business over the last 14 years is through referrals, through close referral sources and my past clients. So if I don't do good by my client, they're going to go back to that referral source. You're not going to get any referrals from there. Plus, over a period of time, you start getting a lot of referrals from your past clients. So if you don't treat them well, you don't give them good rates, and you don't give them good service, they're definitely not going to come back to you, and they're definitely not going to refer you to their family and friends. We get a lot of past clients coming back to us when they're buying another property, or they're referring it out to their family and friends. Oh, I worked with Pete. So that's how a lot of our business comes back. We do a little like Facebook advertising, stuff like that, but we don't spend money on just doing like mass marketing stuff like that,
commercials, things like that, right?
Yeah, like
Right.
mass mailings, or just even like a lot of people spend a lot on internet leads, stuff like
Yeah.
that. I haven't built my business that way.
Yeah.
That's what's kind of been my focus.
Yeah, me too. Yeah, and you know what? At the end of the day, it makes the process of what we do far more enjoyable for us because we kind of, we have the ability to kind of pick and choose who we work with, which has been nice, right? Because when you're working by referral, it's more important to make sure that there's a smooth transaction than it is to just work with anybody, right? Because
Right.
if the client's going to be difficult, it's going to make my ability to care for that client more difficult, and they're not going to enjoy themselves. And it's just, is that really worth the headache? So it's nice to work, that way by referral, as the two of us do. So let's jump into the meat and potatoes of this thing, right? Mortgages, right? It's a weird place, and it's a place that not a lot of people have a ton of education on, right? So let's start here, right? I mean, a lot of people in Hoboken end up coming here. They rent for a couple years, right? Maybe save some money. They have a roommate. They settle down with a girlfriend, and then all of a sudden they go, okay, we're going from renter. We want to stay here for a few years. We're going to buy something, right? So talk to me a little bit about what you can do for my renters that are looking to buy in terms of educating them on like the renter to buyer breakdown.
Right. And that's something that I actually enjoy doing, is I like working with first-time home buyers because you get to educate them, because the process can be super overwhelming. So what we do, and is it all right if I just share my screen
Yeah,
for
go ahead.
a
Yeah.
second here? All right, let's see. Share. All right. If you see this is just, real quick, this is just one of the pieces of software that I use. And this is basically a rent versus own scenario. Someone renting of $2,500 a month, and it's 25 because put the renter's insurance in there. And basically at a purchase price of like 500,000 with 20% down, 15% down, 10% down. This is a condo, estimating taxes at like 600 a month, HOA fee $350, HO6, which is your condo insurance. And then it shows you, so for that 25, here's where you're paying for rent. Here's where your payments are going to be, putting 20% down, 15% down, 10% down. But more importantly, if you look to the right column here, and I don't want to bore too much with this, so I know I'm going quick.
Yeah, sure.
I can always answer more questions if anyone has questions later on. But your net monthly payments takes into consideration a few different things, and basically it's taking rental increase, property appreciation. And I don't have the tax bracket in here, but you get mortgage interest deduction. So the actual net monthly savings of how much you're paying rent compared to what you would be paying over a mortgage, as you could see here, it's a nice savings that you actually be having. You don't actually see it like really in your pocket, but that it's actually a net monthly payment. And then the other thing really quick is your rent versus principal paid over a 5-year period, and then your rent versus principal paid over a 15-year period. So obviously you can either over 5 years, be putting $160,000 into your landlord's pocket, or you could be paying $47,000 down towards your own principal. And basically, I know it sounds a little cheesy, but building wealth through real estate too, while having your own, your own property and building your own assets. So this is just one of the examples we use in, that type of, situation.
Sure. So when somebody comes to me with that question, right? One of my big things is I always immediately say, listen, this is stuff that you should contact Pete for, right? Mm-hmm. Because there's information, there's numbers, information, everything else, right? So I usually push them to you. That website though, right? And you're able to actually send me a link to that website that I can send out to clients.
Yeah, I'll send you your own personalized link to it. And I can also customize it to any single client. So even if your clients don't have time to talk to me, but they could give you some general information, what they're looking for, I could customize any of that. And that also, the same kind of software goes along when you do have a client that's looking to buy something. We'll just show them to help them see those breakdown of payments of, of 20, 15, 10% down.
Sure.
Or if they're between 20, 25% too. Also, if you have someone that's kind of on the fence, should I wait? Should I wait? Should I buy now? Should I buy 6 months? Well, I could show them that, okay, this is where it looks like rates are trending in 6 months. Sure. Or this is where property value is going to be trending in 6 months. So here's your benefit of buying now. So it's basically your cost of waiting analysis, and you could do it cost of waiting with rates increasing, cost of waiting with house prices increasing or cost of waiting with actually both increasing.
Which is big, right? So that kind of brings us to, a couple of things, right? So you talk about rates increasing and everything else, right? So a big concern, right, especially with the political climate that we're in right now. The election is now behind us. What is it that really influenced the movement of the mortgage rates, right? Because everybody's kind of talking about how low they are right now, and people may be afraid that when they're going to go up and everything else. So what is it that really actually influences the movement of mortgage rates?
Right now, it's the Fed. The
Okay.
Fed, yeah. Fed's
So the Fed, so the Fed just makes it. The Fed just sits in a dark room and they just go, "We want to move the mortgage rates today." How does that work?
Yeah, basically. Over a few beers. Now, listen, I'll give the Federal Reserve in this country, like they actually did like a fantastic job when COVID hit. They really, besides holding up the United States, have kind of been holding up the world financial system right now by doing unprecedented things with spending with the money they have to spend. The Fed buying the mortgage-backed securities, buying corporate debt, buying all this debt, really just keeping the economy going. So the problem, there's a few different things, and I really don't want to. This gets a little bit technical with money velocity, inflation, stuff like that. Is that really we're going to have low interest rates for an extended period of time?
Okay,
I keep saying,
that's the important thing.
We may have low interest rates for the rest of our lifetimes. And when I say low, I'm not saying the rock bottoms of like 2.5, 2 3/8 on 30-year fixed mortgages, but we're probably going to have low mortgage rates for an extended period of time.
So is there ever any worry then at this point that somebody should be sitting there going, "Oh my God, I need to get in contract and lock a rate in the next 6 months"? Should buyers be making knee-jerk reactions like that at this point?
You shouldn't be making knee-jerk reactions because you have to first make sure you're comfortable in the property, and like you could speak more to what's going on with the inventory in the market like that, especially with the fleet from city to burbs. People are kind of a little bit overpaying right now, and that's kind of offsetting because where rates are still low right now. But still, you don't want to get into some type of situation where you're paying way too much over what the market actually dictates in like a normal market. But I'm not going to pull it up, but I was just doing a little scenario with someone the other day where like on a high balance mortgage, the interest rates now are about a quarter point higher than they were off of their lows. And probably where they're going to end up, I would say probably towards the end of 2021 are going to be a half point higher off the lows. So that's basically almost about a $200 difference in monthly payment on a $600,000 mortgage. But the bigger thing is the interest. So it's, you're looking like an extra, like over 5 years, you're probably like looking like a 14,000 over 15 years and over 20,000 more interest you're paying over that period of time. Right.
So the interest over time is really what kind of gets people beat up on it. So there's no reason there's no reason to think that, oh my God, we're at 2.8 now, and this time next year we're going to be back at 4. Like there's no reason to think that like you're going to be like anything crazy increase.
Well, I would say unless the most craziest thing happens, but we've just seen some of the craziest things ever happen in our lifetime. So if you had that crystal ball, we'd both be sitting on a beach.
We'd all be rich, right?
But so just look, I'm just we subscribe to different services and where we track the mortgage-backed securities. Sure. And the mortgage-backed securities is really what pushes rates up or down. The Fed was the only one that was buying them during really the thick of COVID, which was really keeping mortgage rates down. Now some of the private is back in buying the mortgage-backed securities, but the Fed is still buying a big percentage of them. Good. So that's really what's keeping mortgage rates down right now. So what we do is we follow to make sure our clients, we give them the option to lock float, give them our best advice of where we think the market's going. No one really knows where the market's going from one day to the next, but it's kind of the research that I've been doing looking at 2021 when it comes to mortgage interest rates is that they will be going up, but they're not going to be going up to 5%. They're probably going to be going somewhere in like the low to mid 3s, I would assume, maybe by end of 2021. But there's also someone saying that when we really start to get out of this, we really see the impact of what's going on with the financial markets, that the Fed may have to take more action, and you may actually see a dip in mortgage rates, a short dip in mortgage rates going off their rock bottom lows that we previously hit. That's not for certain, but there are some.
But it's a possibility.
Yeah, like I'm not an expert on it. I just do my research and I listen to different experts on it, try to form my own opinion on it. And that's kind of been the trend. That we might see that little pop below the historic low, and then you'll see them slowly go up. But they're not going to shoot up from 2.5% to 5.5%. They can't, or the economy would collapse.
Sure. You know, okay. So to that point then, right? With you know, you talk about mortgage rates when they go up, everything down, right? Excuse me. A lot of people that tend to be the most, you know, rate conscious people, right, tend to be first time home buyers. Right now, first time home buyer comes to you and just says, Pete, I need advice.
Yeah.
I'm going to get a mortgage. What are, you know, give me your top 3 pieces of advice for a first time home buyer from a mortgage standpoint.
Right. I would say, all right, first is, you know, I always start when we do the pre-approval is you could be approved on paper for a lot more than you actually may want to spend, right? So we'll back that out, how much you feel comfortable saving. And then when it comes to the rates, I'll say, this is where we think rates are going to be going over the next 3 to 6 months. So here's what your payments would look like if you purchase tomorrow, 3 months, 6 months, right? There's no guarantee any of these, but this is our best advice that we could give you to help you prepare for those different payments. But really, at the end of the day, it comes down to timing. Unfortunately, that's really how it's always been. It's just when you do find that property that you've been looking for, it could be in a week, it could be in 6 months. The market's just going to dictate what the rates are. So
first piece is make sure that we have a set number for them. Right? Come to you, get an actual realistic price that they can afford.
Yes.
Right. Second piece would be then to take a look at the rates and kind of try and forecast where they're going to be during their timeline of their search.
Right, because there's other things too. It's like, okay, I want to spend this, but rates may be going to this, but we did the pre-approval, we're seeing your credit report. Maybe there's some stuff you could do over a period of time to help reduce a little bit of that debt. So now you're not paying as much of that debt, you're paying that into your housing payment, right? Or different things with down payments, you know. These are one of the times right now where you're actually, you don't say this all the time, but you're better off financing more. Like if you were thinking of putting 25% or 20% down, I would say, you know, go with 20% down. You're borrowing at under 3%. You know, take that other cash, either keep it on hand or invest it in the markets because you're going to make way more than what you're doing at
parking in here, right? It's like the old saying, like money's free right now, right? The rates are so low they're giving away money essentially right now when it comes to taking a loan. Yeah.
Well, yeah. I mean, if rates were 6%, I would say, okay, if you're really comfortable with the 25%, do the 25%. But 2.5%, I mean, you can make a lot more on your money, or you could use that for different renovations or whatever.
Renovations and stuff like that. Yeah. So you hit the rate lock stuff, right? Give me a quick breakdown. How long does a rate lock last, right? And is that timeline, you know, feet to the fire timeline? What does that timeline mean for that rate lock?
Well, you know, like I said, you lock it in for a specific period of time. So if you need to lock it in for 60 days, we lock it in for 60 days. You know, the rate lock does expire. It depends. Sometimes you have a little bit of wiggle room to extend it, maybe for another like 5 to 7 days. That's some of the stuff we have to deal with on the secondary market of how long we could extend our rate locks for.
What does that cost? What is it? Does a rate lock cost some money? Correct.
It depends on the back end. Sometimes we're able to do it without costing our clients anything. Most of the times we are when it's a small rate lock. But if something like really big happens and rates do move significantly, it will cost to extend those rates. And a lot of the times you can't just extend the rate forever. A lot of investors have, if you lock it for 60, you could only extend it for an extra 30 days. So really you're only like 90 days out, because those investors that even if at other banks or whatever, they hedge these markets. So they're basically kind of hedging that this amount of business at this rate will be delivered in this amount of time. So they have to also deal with their secondary markets when it comes to stuff like that. And that's I don't know if were you going to touch on the COVID stuff on like the beginning of the mortgage market? No. Because that kind of, for a little bit, it kind of like the mortgage market went to a stop dead in its tracks because there's a lot of people locked in all these rates because there's usually about like a fall through. Not everyone's going to refi or everyone's not going to purchase. but everyone did because the rates were so low.
Right.
So it was a big mess we had.
It's like
for
a
little
logjam.
bit. But we all got through it, and we came out at the other end, and everyone's okay now.
So you just brought up a good point, right? Everybody was like refiing and everything else in the beginning, right?
Right.
For the homeowners out there, refi, what's the formula to figure out maybe they should refi, should they not refi? Rates are low. I'm hearing I should refi. What is the give me the basic breakdown of whether or not somebody should refi?
Well, there's always a break-even point, right? So when there's a refinance, there's costs that are involved. There's some bank fees with the appraisal and processing fees. There's reissuing of title insurance. There's re-recording fees, re-escrowing your taxes and insurance. So most 99% of people roll that back into their loan amount, especially with rates being so low. So typically there's a break-even point of when you're going to recapture those fees and savings. So first thing I always start with every client is what's your short-term and what's your long-term goals. If anyone that says that they're planning on staying in this property for any significant period of time, 100% makes absolute sense to refinance. And what I'll do, similar to the software I showed before, is I'll take your current mortgage. I'll get a copy of your mortgage statement. We'll give you all the information on it. And I'll show you currently, and then I'll put that up to, because if you've been 5 years in your mortgage, you may not want to go back to a 30. You just lost 5 years. So I'll show you a 30, a 25, a 20, and a 15 of where your payments will be. Most importantly, it's not so much the savings in those monthly payments, it's the interest savings over a period
over time.
You could save $200 a month, but you could save over 5 years $45,000. That's
right.
Really where the savings is, that if you're planning on staying there in the interest. So
right.
That's one thing I always do. Every refinance, every single person, we call it a total cost analysis. We send that out to everybody, and it shows them where their payments are going to be. Or, a lot of people, you might want to take advantage of, do you feel comfortable paying an extra $150 a month? Yeah, I definitely, because I want to kind of pay down my mortgage a little bit faster. It's two theories of paying your mortgage off faster and not. Rates is low. Most people still want to pay it off, not right away, but pay it down a little bit sooner. So
sure,
$150 a month, where rates are right now, could accelerate your mortgage like 10 years, going from a 30 down to a 20. So
right, which is significant time.
Yeah, definitely. So
good. So that covers the little bit more in-depth, breakdown of mortgage stuff. Yeah. So if you guys have questions about mortgage stuff, right, give me a call. I'll put Pete's email at the end of this video. It'll be below in the comments section, everything like that too. But if you have any questions about mortgages, right, Pete's the guy, trustworthy, and if it's just basic conversation stuff, right? So let's move on to something that's a little bit more fun, Pete. I'm going to put 30 seconds on the clock, right? And now we're going to give some people some real in-depth look into Pete, right? Oh, we're going to go rapid fire. 30 seconds are on the clock. First answer that pops into your head on each question. Ready? Ready? Here we go. First job.
Garbage man.
Garbage man. Red or white wine?
Red.
Favorite dinner?
Steak.
Favorite local deli?
Goldberg's.
And that's in Wyckoff, I'm guessing. Okay. Go-to lunch. What's your go-to lunch thing?
I'm usually a salad with some type of grilled chicken for lunch.
Okay. Favorite cocktail?
Beer.
That is it. You are finished the rapid fire. Congratulations. You have won absolutely nothing for completing rapid fire. Last question. As struggling Jets fans, yeah, it's rough, I know. Do the Jets finish 0-16 and get the #1 pick?
Of course not. They'll win 2 games. Not supposed to win. Are you serious?
Of course they will. I agree. All right, guys. So that wraps it up for Hidden Hudson today. Thank you for tuning in. Again, if you have any mortgage questions, Pete's your guy. And as always, if you or somebody you know is thinking about buying, renting, or selling in our area, please reach out. We're never too busy for referrals, and we'd love to work with you guys. Tune in next time, and thanks for following, guys. Don't forget to like and subscribe to our YouTube page, where a lot of this content is going to be starting to get posted. Have a good day, guys.
Take care.